What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this Friday afternoon. If I'm being honest, this is one of the most important videos that I have put out on my channel up to date. And this information that we're gonna go over in this video, I need you guys to fully understand. We all need to know this information so we can really read the data that is at our disposal and figure out exactly what is going on. So the main premise of this video is going to revolve around a question that I have been asked a lot over the past week, and that is gonna be, have the shorts started to cover their short positions in AMC? This is an incredibly important question to actually figure out in order to determine where we are in this short squeeze situation. Have the shorts already started to cover and we are actually at the beginning of this short squeeze? Or are we at a time even before that and still in this FOMO / gamma squeeze rally? These are questions that I am going to answer in full in this video by using hard, concrete data. And I'm going to show you guys why some of this data may actually be wrong. So before we get into all of that information, if you guys enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it helps us out a whole lot in getting this information out to as many people as possible. And the more people that we get learning about accurate and up-to-date information about AMC, the stronger our community becomes. So, additionally, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description as well. Now, when we're looking at the price action of AMC throughout today, we've seen something a little bit interesting. So, we know that the SSR was turned on for AMC today, meaning that shorts can only short AMC when the stock price is increasing. That is why all of these little blips in these different price movements coming up when we think we are about to break out have been short-lived, because the shorts are essentially saving their ammo for when we start to see a slight bullish little breakout, and then they short it back down. Now, in addition to this, the shorts or the actual institutions that have been selling options on AMC are really on the hook for a pretty large obligation in terms of the delta hedging and the gamma squeeze that has happened throughout this past week. There's an additional 15,652 contracts at this $50 strike in terms of the open interest, meaning that if they can push the share price below 50 by the time the market closes, then they are not on the hook for delivering on these actual options contracts. Now, let's get into this very pressing question that we have. Have shorts started to cover? Now, we're going to need to look at Ortex for this. The key things that we're going to be looking at are the returned shares, the utilization, the shares on loan, the percentage of free flow on loan, and the estimated short interest as a percentage of the free flow. So that is going to be incredibly important. So when we're looking at the returned shares, there's kind of a delay in when we see this data actually coming in for the returned shares. And it's a 2-day delay due to the T+2 settlement period. So these returned shares that are showing up today could potentially have been returned 2 days ago when we saw that massive price increase of AMC. Now, a lot of people might be thinking that this is a sign of short starting to cover. Now, that is completely possible. I want to make sure that is clear to you guys. It is entirely possible that some shorts have started to cover. Now, what we're going to go over in the rest of this video is a couple of ways that this data is actually being manipulated. I touched upon this in a couple of my previous videos, but this is really something that we all need to understand. If you guys remember back in January with the GameStop short squeeze situation, a lot of the different news media outlets kept saying the shorts are covering, the shorts are covering. Now, when the DTCC chairman actually went to the court hearing that we saw DFV actually participate in, he made a very interesting comment. No shorts have covered. When we saw the data coming from GameStop, the data actually showed that it looked like shorts were covering. Now, here is where this could be coming from. The shares on loan right here, the most current and up-to-date information we have is 138 million shares that are actually loaned out. So that is 138 million AMC shares that have been loaned out. The percentage of the free flow on loan, 27%. But here's what's very interesting. The estimated short interest as a percentage of the free float is only at about 17.46%. So there's a very interesting difference here where shares have been loaned out, but they have not actually been shorted. Say I was loaned shares of AMC and I hypothetically wanted to short them. I don't actually have to sell those shares. There's no obligation that would force me to actually sell those on the open market. And that is exactly what is happening with the institutions that are actually taking these shares on loan. So what is possible that is happening here is that the shares that have been loaned out that have not actually been shorted are just getting returned to the institutions that have actually lent them to the institutions looking to short. So I know that might be a little bit complicated, and let's break that down very simply. So institution A lends 100 shares, let's say, to a hedge fund that wants to short them. The hedge fund only shorts 75 of those shares, meaning that they still have 25 shares that have been loaned to them that they have not shorted. What they can do then is after paying the cost to borrow those shares, they can just return them at any time. Now, some of you guys might be asking a very important question to yourself right now, and it's actually a very smart question. So why would we see these short interests actually fall if these shares actually have not been shorted that are being returned? We actually expected to see a slight decrease in the short interest over the last couple of days because as we can see, the shares outstanding for AMC after these two different offerings, the 8.5 and the 11 million, increased the shares outstanding according to S&P Global. This is where Yahoo Finance gets their information, to about 513.33 million shares. So we would expect to see maybe a slight decrease in the actual short interest. Now, here is where this video is going to get slightly more complicated, but this is something that you guys need to understand and is at the crux of what happened with GameStop back in February, and I believe that it is very possible that the institutions are doing this again right now. We brought up this article from Seeking Alpha. I know you guys don't really like Seeking Alpha, and they are owned by some hedge funds, but this article right here tells us everything we need to know about how the hedge funds are actually going to make it look like they have covered their short position through the use of deceptive options trading without actually covering anything. So we didn't really go through this in full in the last video that I talked about this, but we are going to do that today. So plummeting short interest along with a plummeting GameStop share price, in other words, could indicate that the Reddit army is headed for the hills, and the longs were selling early, giving the shorts a means to cover. As the longs got out, important to note that if the long holders of GME shares did not break ranks and sell in mass, it would have been impossible for the share price to fall and hedge fund short interest to fall at the same time, because without a critical mass of long side holders selling into the market, the hedge funds covering their shorts would have nobody to buy from. So the second scenario is where hedge fund short interest in GME didn't really dissipate, but instead they played a trick to make it seem like they did. Here is what is going on. So the tactics involved are not a secret. In fact, the Securities and Exchange Commission knows all about such tactics and published a risk alert memo on the topic in August 2013. The SEC memo is titled Strengthening Practices for Preventing and Detecting Illegal Options Trading Used to Reset Reg SHO Closeout Obligations. This is essentially talking about an FTD reset cycle. Now, how do they actually do this? So this is a very complex trading strategy, so I am going to read from this article. Sorry if some of you guys don't really like that, but this is what we need to do, and this needs to be fully understood by everybody. So a hedge fund that is short a stock can write call options on a stock, meaning that they are now short the call options. So when they say write call options, that just means that they are just selling them. So now that they've shorted the call options, having sold them to someone else, typically a market maker, and simultaneously buying shares against those call options. The shares bought against the call options could be, quote, synthetic longs, meaning they are not part of the original share float of the stock, as sold to hedge funds by the market maker that takes the other side of the options trade. This works because if a market maker buys options from an options writer, the market maker has, here's where it gets important, legal privileges to do a version of naked shorting as a part of their hedging function. This is necessary under the current rules and the current system for market makers to protect themselves when facilitating options trades. As a result of the above transaction, the hedge funds that sold short calls were able to buy synthetic long shares against those calls. The synthetic long shares are on the other side of the naked shorts, legally initiated by the market maker, so this market maker can hedge. This creates the appearance that the hedge funds have actually, quote unquote, bought back the shares that they have sold short, but they actually didn't, which manipulates the data that we are seeing. Now, here is a clip directly from the actual SEC memo that is mentioned in the Seeking Alpha article. Trader A may enter a buy-right transaction consisting of selling deep in the money calls and buying shares of stock against the call sale. By doing so, Trader A appears to have purchased shares to meet the broker-dealer's closeout obligation, here we go, for the fail to deliver that resulted from the reverse conversion. In practice, however, the circumstances suggest that Trader A has no intention of delivering shares and is instead reestablishing or extending a fail position. This is why we have seen a T plus 21 and a T plus 35 FTD reset cycle where we see the failure to delivers automatically spike because they are kicking the can down the road in order to make it look like they have closed their short positions, even though they have not done that. That is something that you guys need to understand. I have pointed this out that eventually the Ortex data that we are going to be looking at might be slightly manipulated, and I'm honestly thinking that it's possible at the current time that we are starting to see this. We have seen AMC go up an absolutely crazy amount over the last 5 trading days, actually about 100%, a little under 100% right now, and I would not be surprised if some smaller institutions have started to cover their short positions, but I think what is more likely is that they are utilizing these deceptive options trades to make it look like they have covered some or all of their short positions when actually they're just kicking the can down the road. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys had a great week, and I'll see you guys in the next video.